Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, July 22nd, and this is your end of day recap. So today kind of felt like I don't know, a couple different days, or maybe a couple different themes to kind of go through or walk through today. But we caught a couple nice trades in the beginning of the day, and then of course then it kind of turns into, as we get close to the end of the day, what kind of earnings are we going to get from some of these big companies? So we'll go through Microsoft, and we'll talk about Tesla and Chipotle. There's of course other names that reported too, but those are the big ones that get the most attention right now. But I think bottom line, like I think what we're seeing is, and this is really good to kind of understand like how to play earnings if you understand how to price the implied move that option market makers put into the options. I think a lot of newer traders. Again, I feel like I talk about newer traders almost every day, but it is what it is. There's a lot of I would say a lot of new players have kind of entered into the space, which is a great thing. You just what I'm here to do is kind of help and try to get traders a little bit caught up to speed and teach them some of the things that I've learned in option trading and just how the market functions and works on a day-to-day basis. But if you look at things like, well, let's talk about the big guy that everybody's looking at, 1667. So Tesla is up. What that's about 2 or 3%. It's basically where it got to, where it was earlier in the week. The options market makers were implying a 14% move. 14%. So this is basically what we do during the day, and we had a nice Q&A session where I kind of broke down some of these trades. But that's a big move for earnings. So if you're going to play, if you're going to try to buy outright. So first of all, for something like this, where a name is that expensive for options, meaning that if you're if the market makers are implying a 14% move, that means that the option costs a lot of money, much more than usual. Now, normally Tesla options are expensive, but they're adding in, the uncertainty of the event, and 14% is a big move. So that range, so the first thing, always to do with these earnings is to calculate the implied move, and that's calculated by taking the weekly calls. So in this sense, the July 24th calls, and taking the at the money strike of the calls as well as the same strike at the money in the puts, adding that premium together, the cost of both, and then dividing by the stock price. That's how you figure out the implied move. Something that you should kind of get a little bit familiar with, because you're going to have to do it over and over for earnings. And then what you do is you kind of just put the range together. Okay, so what are they implying? What's the price that they're implying by what the options are pricing? So that gives you a range of 1804 to 1361. So that's how I devised my trade for this. And again, I think as I've said, kind of as we've gotten into earnings season, I think the best trade right now is to sell premium, right? So not go directionally long, which is what, let's face it, some of the newer traders want to do. They want to play direction, right? And it's kind of like a little bit like the casino mentality, right? Players want to go ahead and play. They want to put chips on the table, but the casino doesn't make any bets, and they will win in the long term. So it's kind of like the same thing with selling premium. If you're kind of going against the call buyers and the put buyers, you can make some money. So that's basically what I did. I sold I did a credit spread for the put side as well as a credit spread for the put side. So in this sense, I didn't want Tesla to move 14%. So barring any announcement here on the earnings call, this looks like it's in pretty good shape. So I sold the Tesla July 24th put spread, so selling the 1390 put, buying the 1380. Now again, I went really far because I did think that Tesla does have a chance to move, but I went pretty far enough, and I collected 220 for that $10 wide put spread, and then I didn't want to play it directionally. I also sold this week's 1780 1790 call spread. So selling the 1780, buying the 1790, and I collected 210. So if Tesla stays where it is and it looks like I've got some decent bumper room to work with. I collect $4.30 per contract, so that's nice. That's $430 per gain per contract, and I thought that that was a good play. And again, there's risk. Obviously, is if it breaks through, all the way through. Where is this? 1790, then I'm on the hook, right? So it's the premium collected minus the width of the spread, which is 10. So I was comfortable with that risk because I could always hedge it after hours too. So for example, if Tesla, rallied past, 1750, then I would start to buy a little bit of stock in the aftermarket, right, to protect. But I didn't need to do that. It's right in the middle. So that's just one example. That's Tesla. But ultimately, that's how these trades are going down, right? And we saw that too with some of the names that reported after hours yesterday. Texas Instruments, Teradyne, they started up and they got faded. So that we're seeing more often than not too, is that stocks are having a difficulty. If they do rally off the initial move, they're having a difficult time moving. Same thing with Chipotle. So more of like what you'll see like on Twitter is the amateurs will say, "Oh, this was a premium kill." Well, then set your trade up for that, because there's right now it's a trade where basically you collect, like the game of life, you collect $200 for pass and go. Right, I think that's what the dollar amount is. But you collect money for pass and go. So if the stock doesn't move in a gigantic way, you can really make money that way. And again, I'm capping it with spreads. I'm not selling naked or anything like that. I got a lot of questions about that today. Don't want to ever do that because that can blow up your account. So Microsoft, why is Microsoft down? I actually thought Josh Brown on CNBC. I agree with a lot of times with what he says, but it's some of these moves. The reason why the stocks aren't moving, you have to remember how trading works. Like, and I think again, this kind of goes with some newer traders. That I think newer traders, like if they see like the company beat earnings, they're expecting the stock to go up. You have to look at the path of what the stock did going into earnings, right? So for example, if a stock rallies 50% in the last 2 months, what do you think they're going to have to do on earnings? Versus if a stock didn't do anything for the last 2 months and then they beat, you're probably going to get a pop on earnings. But if they rallied 50%, the move is already priced in. Again, this is logical things that you have to think about. So, look at the path of the stock and realize what may be priced in. Now, same thing when we get to next week with Google and with Amazon. Do you think that, what is Amazon going to have to do to go up? They're probably going to have to announce something outrageous. And I think that they're going to have a similar move, maybe plus or minus a few percent, unless they come out with something that is where they have some unforeseen event for Amazon, something that people are not expecting, obviously, right? I'm just thinking, I'm going kind of along with the consensus, just like with Microsoft. I think everybody thought that they were going to have a good quarter. I kind of think that too with Amazon. So I would probably say with Amazon, the risk is to the downside for next week, because I think the expectations are high and the stock has gone up a lot. Right? So you have to think about it in terms of risk reward. What's more likely to happen? Or what would be more of a surprise that people that is not into the stock? Probably some negative news, right? There's awful lot of positive news in the stock. All right, so we'll move on. That's earnings, but again, we're in the middle of earnings season now, so this is what it's going to be. And again, anything like this, like I'm pleasantly surprised when I see the market up, because I associate earnings season with chop. And if you've been listening to my videos, you know that that's kind of what my expectations are, is a lot of chop. And I try to look for names after earnings, right? I talk about the 3 different ways to play earnings. Number 1, the run into earnings, possible run into earnings, like many of the FANG stocks and momentum names have done. That's the number 1 trade, and that's the easiest trade. The number 2 is maybe buy the name on weakness afterwards. Like Microsoft might be a candidate for that. We'll see. Oh, by the way, I actually did buy a little bit of Microsoft, but I'm kind of legging in a little bit. And then, of course, 3 is to do an actual earnings trade. So that's that. So let me move on to some other moves today. Look at the home builders. My goodness. So this was a trade that we were long, was the home builders. There was some really good existing home sales today. We went ahead and took out that VPOC, right? So that was my target. I've also been long things like Home Depot, which I took that trade off today. I think do I think Home Depot can continue to go? I do, but 1, 2, 3, 4, 5. Now, I could be being a little bit cute here, but I'll wait for maybe a little bit of a move down at this point. Lowe's also on fire. Lennar that we've been covering. Lennar, so I'm going to have to pay attention to because we've now taken out this VPOC, which again, prices can get over the Virgin point of controls, but they usually hesitate. DHI did not hesitate. DHI is up and above. So this was your best performing group by far today, and really really nice. And I've been positioned in this space. So also we got the AMD trade today. This is something that we set up in our pre-market session, which starts every day at 9:05. But we nailed this thing today. Really nice. And here is my trade. I just bought stock in I just bought stock in AMD today. I didn't mess with the options, and that worked out fine. And I'm still holding a piece. I took a couple targets in AMD, and they report next week. So I'm looking for possibly a further move again. So this is kind of like trade number 1 that I mentioned for earnings, right? I'm not going to wait for the earnings quarter. I'm going to position ahead of time because that's where the moves have been taking place. Position ahead of time, right? You take so much out of the equation if you can do that. You don't have to worry about what are they going to do on earnings, or is it going to be a good quarter, is it going to be a bad quarter? Forget it. I'm going to play it the move going into, and then I can make a decision about what I want to do once we get to 728. So, whoops, I'm on the wrong page here. Here was our AMD trade. First target was 59, so I started taking targets, and then I basically just stopped. And I liked the way I said I've taken 2 targets in AMD. I got my final target, as I mentioned, in ITB. I played a little bit of NVIDIA too, and then took this one at the end of the day because I'm being very cognizant of how much risk I want to carry around earnings season. Dollar General was another name that you see me mention on Twitter. I was talking about how this is super coiled. So it took a couple days for this to work. And then I took this trade off. I had some short-term calls, and I took this thing off and I rolled it. Here's my last Dollar General trade. Out at $8, paid $5.90 average price because I added to it. Again, very important when you're dealing with short-term options to leave yourself some room to add. Sometimes the premium will go down rather quickly, and you haven't even done anything. Oh, and Microsoft, by the way, this was my earnings trade in Microsoft. I also sold premium, and I did this for $1.90. This was at what time? 2:20. And then I was able to actually unwind it because the it changed, and I said, hey, I'm going to take I'm going to take advantage of that and take it off bought it back, short put spread, bought that back for $1.35, sold that 190, and then I didn't even have to mess with the print. All right, so that's a couple trades that we went through. I think RTX looks pretty good too. Nike that I think I went over yesterday, moving in the right direction. McDonald's, I think I mentioned in yesterday's video. I did not take this one, unfortunately. I hate that when you set it up and you don't actually take it. I didn't talk about the metals, but silver. I'm going to talk about something that I put out on Twitter earlier, that this took out this VPOC. We'll see what it does. Again, for me, that's a place where I want to take profits, but really strong, and who's to say that this thing can't get above that? So we'll see, but usually that's a place where I want to take targets, 23.20. Also, if you're looking for something a little bit different, right? I've talked about the move in palladium. We made some money on palladium. What about platinum? Platinum was up 4.5% today, something that, again, we talked about pre-market. Look at the weekly candle, and now zoom out. I was talking about how I don't buy names in downtrends. I've talked about that a lot. or I don't, unless every once in a while I will do a counter trend trade, but for the most part I stick with the trend. Look at the difference in something like this, right? We were talking about like a stock like Tillery pre-market today. And I said, look at the difference between, people who are looking to play Tillery. This has not stopped going down, right? I don't know that this is the downtrend is done. Very easy and simple rules to look at the 200-day moving average. Once a name gets back over the 200-day moving average, that's when it's confirmed out of its downtrend. Notice how far it has to get to. It's not, and this stock is not even in value. So I get it. People want to buy something because it's cheap, but look, you could have said that at 65, at 60, and people did. I remember, oh, I'm going to buy Tillery here. It's down a lot. It's $50. Oh, now it's $40. Now it's 30. Now it's 20. It's $7. So I get it. You could buy it here and you're like, oh, I'm only risking $7. Well, what happens if it goes to 5? Then you're probably going to think, oh, then I got to buy more. What happens if it goes down to 2? Remember, this was a $2 stock. What's stopping this to go down to $2? That's what the trend is telling you, that it's a downward trend. Now look at the difference between what's going on here on the weekly chart in platinum. This is how usually a stock gets out of a downtrend, right? So downtrend, below the 200-day moving average. Downtrend, 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 downtrend. Tried a couple times to get above the 200-day moving average, failed. But look at least now it's basing, right? It's showing some signs of life. That's usually how a trend reverses. Unless there's some big news in a stock or in an area of the market, it usually needs to base and go sideways for a while before it retakes and makes a downtrend. So it's just something that I've learned over time, why I don't trade names that are in downtrends, because they don't just snap back right away. Usually, they usually take time. Again, some people like to trade them for bounce trades. That's fine, but ultimately, I really try not to get caught up too much in names that are in downtrends. All right, guys, have a great night. Thanks for watching. See you tomorrow.